Today we're talking about how to save money, particularly on your mortgage payment. So stay tuned, I'll get into the details of that here in just a few seconds, just a couple of things real quick. I appreciate if you like and subscribe to the channel or like my Facebook page. Just helps me out a lot and just helps things to be seen a lot more when you interact with that stuff, so appreciate that. At the end of the video, I will do a ridiculously funny real estate / Halloween joke, so stay tuned and watch that. Good stuff, maybe. And so let's get into this here real quick. So how to save money. Particularly right now, you can save about $35 a month if you act quickly. So what I want to talk about is mortgage rates. They've slowly ticked up in past month or two. And then really, people are beginning to make predictions for next year. So it's, that time of year where economists and all kinds of people start to make predictions for the following year. There are some people who are predicting mortgage interest rates to go as high as maybe 5%. Definitely don't want that to happen, but in all likelihood they will go up. The question really is just how much. So let's compare with some things right now. I ran some numbers based on pretty much the average home price, or at least for Springfield. Average home price is $220,000. So I took a $220,000 home and based off taxes and plugged in a number for insurance, and so all things the same. I compared a 3.5% interest rate compared to 3.5% interest rate. Right now you can still get that 3.2, but just a pretty safe bet that in some time it will be back up to that 3.5. So those two numbers compared, like I said, everything else being the same, getting locked in at 3.2 saves you $35 a month. That's not too big a deal. You go out to eat one extra time a month or whatever it is, just save money back. $35 a month, not too big a deal. However, you put that annual, that's $400. Can't remember actually right now. Have to do the math. Of course, you can't do it on the fly on the video. $410 maybe. Annual. That's more than enough budget for a kid's Christmas, or probably multiple kids' Christmas gifts. So it certainly adds up. Now, let's say things play out in a way that we don't want. Say they get to that 5%. 3.2 versus 5%. Again, all things remaining the same. That's $183 a month. And there was a time where 5% was an amazing interest rate. And in the history, 5% really isn't bad. But $183 a month. The other side of that is, if those interest rates are higher, that's going to affect what you qualify for. And it will actually reduce a little bit what the amount you qualify for. So maybe you qualify for 220 or 250, whatever it is now. It's going to drop that qualification number down because it's increasing your monthly payment, and essentially they qualify you based on what you can afford payment-wise per month. So there's a lot of effects to this mortgage rates possibly going up. If you're thinking about doing something, I always encourage people to make decisions on what we know, not necessarily on speculation. So there is some speculation in this, but it's almost a guarantee mortgage rates will increase. The question is, like I said earlier, just how much. So if you have questions, I'd love to get together or just talk over a phone call, and talk about whatever you're thinking about housing wise. and goals that you're trying to do. Be happy to help with that. 417-766-4507. And now it's time for the joke. So, a zombie, a mummy, and a ghost buy a house. It has all the usual rooms except for one. Which room is missing? I feel like there should be some Jeopardy music maybe now. The room that's missing is a living room. Yeah, I know, it's really good, right? All right, so have a great week and hope you reach out. We'll be in touch. Thanks.